Jahangir Aziz, the MD and Head Emerging Market Economic Research, jpmorgan, joins us on the show. Jahangir, in the words of Jeffrey Gundlach, it was definitely a hawkish not only in rhetoric, but not hawkish in action. Would you concur with the view? Do you think this two rate hikes that people are talking about further is just a rhetoric and perhaps not will be turned into action?
So we have probably a view which is somewhere in between, right? So look, if you read what the FOMC members actually did, and 12 of the 18 had rate hike terminal rates or peak rates, which was about 50 basis points higher. And given everything that the chair said in the press conference that that things are quietening down, but it's nowhere close to the comfort zone. And if you even look at the language of the FOMC, it's sort of saying that the pause is there to look at more data to assess what is the appropriate level of the next rate hike, right? So clearly, we should brace ourselves for the next rate hike. Our sense is that, this was a compromised move between the doves and the hawks. And this particular, rate pause at this point in time will essentially move into a rate hike probably one more time in July. But after that, I think, you could see a prolonged pause. So you may not need two rate hikes, additional rate hikes, at least the way in which the data is flowing out, that the economy is going to soften, or at least if you give enough time to the economy to soften, the economy is going to soften. And that's where we are reading it. So one more rate hike in July, and then a prolonged pause, and that the Fed does not require two rate hikes, which is there in the median plots. Now, this could be famous last words also.
Jahangir, there is an election cycle in US, and Fed has,
Yes.
in a sense, indicated that inflation will not come down this year. Next year, it will be at least 2 to 3 years. Could politics force them to revisit what they've just indicated last night?
So I don't think that, at 3-4% interest rate, inflation rate, which is, by and large stable or at least continuing on a downward trend, can become that big of an effect. Now, we do know that if you go back to, let's say, 21 fourth quarter, when the Fed wasn't moving, inflation was moving up, there was a lot of political pressure coming from both the Democrats as well as the Republicans to start moving. And obviously, the Fed took its time to move and didn't move till the first quarter of 22. But I think, when you have inflation which is on a downward trend, it's not really there at 2%, but it's there at the 3-4% range. I think that becomes less of a political event than what the situation was, let's say, towards the end of 2021.
Jahangir, just want to draw a parallel to what the RBI back home has done. It's been a pause for the last two times. Inflation data also seems pretty controlled. But, it's uncanny that we're pretty similar to the US right now, because next year it's election for us as well. Just wanted to understand what are you expecting from the Reserve Bank here?
So again, in the same thing that the RBI is, is concerned about inflation, right? Inflation is not anywhere close to where the RBI would like it to be. At the same time, unlike in the US, growth has surprised and continues to surprise us on the upside. There's a lot of resilience in the economy, and we have a different view about growth. But the consensus view about growth, including the RBI's own view about growth, is that the economy is going to do reasonably well with 6.5% growth rate. So when you have that kind of growth rate and inflation is not coming down, my sense is that all pauses are going to be hawkish pauses. So whether or not there's an election coming or not, which is in the first half of next year, I think that the RBI will be forced into this hawkish pause. Maybe it cuts down the road, probably towards the fourth quarter of this year. But it is not going to be the beginning of a large easing cycle. And that's because inflation is unlikely to comply with where the RBI would like inflation to be. Core inflation, even if it's come down, is very, very sticky in India.
Might not be the start of a big easing cycle in India or US, but what about China? Because of course we saw the rate cut happening on 1 week rates. Now the MLR rates have been cut this morning, and then there is this entire chatter of stimulus there. What's your take on what's happening in China and the easing there?
So I think more than the growth slowdown, I think the concern in China, and I know that there is not a lot of focus on that, it's on disinflation. So you had this economy that was closed down for 2.5 years. That economy opens up. You get a first quarter growth rebound, which by any measure is spectacular. And then, the dog doesn't bark, which is that when you expected inflation to pick up, inflation not just doesn't pick up, it is disinflating and disinflating at a very sharp rate, and it could easily print negative numbers in the coming months. So I think that the inflation fears that the economy is going to go into a deflation far more than the slowdown in growth that we've seen in the high frequency numbers coming out in April and May. I think that triggered that reaction. And also, apart from the easing that has happened on the monetary policy front, which of course is not very large because they don't really have that much room. And it is the CNY depreciation which you have to take along with the cuts in the interest rate as the a larger measure of easing that the PBOC is allowing right now. But that is much more a reaction to fears of China entering into deflation, even though growth is reasonably strong, rather than growth just being strong. I mean, just being less than what people had expected.
Right. Okay, Jahangir. Great to have you on the show with that quick commentary on not just US, but India as well as China. I think we've covered the entire globe with that. But good speaking with you.